Hello, everybody. I have been hearing a lot within the silver market that it's overextended. The silver price is up too much. And I've heard of some people that are ready to start selling silver. And one of the things the mainstream media doesn't talk about within investing is to take a little bit off the table as gains are coming in. So for that point of view there, I do not doubt or do not deny or think it's that bad of a strategy that other people are trying to sell. It's just in my position, I don't think it's even went up that much. It has only started to break out to the next levels that has been talked about within so many of these different channels and even within the technical analysis that I've been talking about. And I even watched a video from Don Harold recently. Someone sent me a link to it, a technical analysis video, and he uses totally different types of technical analysis. He used stochastics. I don't use stochastics. I use Fibonacci, trend lines, moving averages. And when a big resistance level gets taken out to the upside, which happened on Tuesday, then comes back to that level as support and lifts higher, that is extremely bullish. When the 5-day moving average never gets violated, to me, I see no signs yet for taking profits off the table. Now, everyone's positions and situations are different. That is totally understandable. But we've only had a 30% breakout from the 18 or so level 32 trading days ago. 30%. Now, to have silver going to $190 per ounce, we would need to have a 30% gain 9 times over. Some people talk about silver at $500 an ounce. You would need a gain 12 times over to make 420. And to get around 1,000, you would need to do it 15 times over. And I was talking before about this silver $1,000 an ounce. And there was good reason for it. One, because of the dollar manipulation. Well, yeah, I guess manipulation, yeah, but silver manipulation, the currencies, how they keep printing fiat monies out of thin air along with the supply and demand issues. The reason why I picked 1,000, it was twice as much as my projected target of 500, and of course, well, just the reasons that I talked about. For selling at this point means you are fishing for a top. Fishing for a top. Now, the path of least resistance for this chart for silver is much higher. And I guess I'm not as strict as trader Brian Shannon from alphatrends.net, where he believes that there's no such thing as up too much or down too much, and I'm a stern believer in that also. So the only way mathematically I see that it's okay to fish for a top or a bottom is to use Fibonacci. And I've seen so many different charts historically on so many different stocks, sectors, and I've seen a lot of up too much and down too much, so I know that it can be possible. And the next Fibonacci level, I've talked about this before, I'll say it again, is that 32 level. And I'm not even that confident it's going to be a major level of resistance, because in order to get to the 3, 4, 5, 6, 800 in a short period of time within the decade, a lot of resistance lines are going to have to be taken out. So the question is, why are you buying? Why? Are you buying to protect yourself against this dollar crisis? If that's the case, this is not the time to sell. The time to sell is when everybody, or a large proportion of the people, are now panicking because of the dollar losing value, because they now understand how it's created, or they have at least a brief understanding of which. When prices just continuously go through the roof, that's what it's all about, for protecting against the dollar crisis. Now myself, I'm not a big silver investor. I got a couple 100 ounces of silver, and I'm not taking anything off the table yet. I'm still buying, actually. And my target for maybe selling a little bit, which might be like 5, 6, 7 ounces, would be at the 32 level. But I still want to wait for the message of the market. If it goes up to 28, maybe pulls back to 24, and then it goes up to 29, corrects sideways through time, up to 32, I might not want to sell then. I'll wait to what the message of the market says. I've heard people talking about when the Dow to gold ratio is even at 1-to-1 to buy stocks and sell gold. And what you're doing by saying that is not caring what the message of the market says. For maybe there will be indicators stating maybe you want to keep your gold. Maybe you want to sell gold but buy something else that's not stocks. That's basically what I'm trying to say, is keep an eye on the message of the market. Now, as far as hedging your bets, I want to talk a little bit about options. If you're not familiar with them and you're interested, do your own research. After all, if you're making the gamble, if you're making the trade, the successful gamblers are the ones that know what they're doing. And assume one has 250 shares of SLV, or one wants to even speculate on a retracement. This is what the play is. I'll set it up so you can read it. November 19, 2010, SLV options, putting SLV at $23, costing $1.11 a share, or $555 for 5 contracts, which is roughly 10% of a holding. What I'll do is I'll put something on the silver log, something like a hedge experiment or options experiment, I don't know yet, and I will show you how the experiment works. But I'm still buying silver bullion. There is no reason for me not to. After all, we've barely seen the rise. And what I'm going to do for part 2 of this video, which will most likely come out between 9 and 10 p.m. Eastern tonight, Sunday, October the 10th, 2010, is do another chart video, which will be comparing 1979 and today, because after I did the research today, after I did worked with the data and put the charts together, I was just blown away with how similar and how everything's rhyming, if you will. Things don't repeat through time, they rhyme, and that's exactly what's happening. So I'll talk about that later on. But as far as buying, selling, or holding, do your own research, find out what's best for you, because if you're selling now, try to get a dip, then if you're doing bullion, you need 2 factors to come into play. One, you need to be able to buy and sell at roughly around the same price, meaning sell today at, say, 24, buy at 24. This way, if you sell today at 24 and then buy again at 20, you'll be making a gain, where if you're paying $2-3 over spot for each coin, it makes it much difficult to be able to do the play. And the gamble is, if it ends up correcting through time or just keeps going higher, you're going to end up losing some silver or paying more than you originally had. After all, life is a gamble. It's a calculated gamble. So make your own, do your own calculations, find out what's best for you, and have yourself a great day. Bye-bye.